This video I will explain the difference between NAV and mutual fund returns. When you start investing in mutual funds, you often hear two terms, NAV and mutual fund returns. Many beginners think both mean the same thing, but both are actually different. What is NAV or net asset value? NAV is the price of one unit of your mutual fund. When you invest in mutual fund, you do not buy company shares directly. You buy units of the mutual fund. The price of each unit is called NAV. Now we will see the simple example. If a mutual fund has NAV as 50 rupees, that means one unit cost 50 rupees. If you invest 5000 rupees, then 5000 divided by 50 is 100. So you will get 100 units. What are mutual fund returns? Mutual fund returns are profit or growth you earn from your investment over time. Returns happen when the value of the mutual fund increases. This increase happens because stocks inside the fund grow, the fund receives dividends, the fund earns interest from bonds. How NAV and returns are connected? When the value of the investments increases, NAV increases. When NAV increases, you earn returns. So NAV and returns are connected but not the same. Now we will see the real life example. Imagine you invest 10,000 rupees in a mutual fund. At the time of investment, NAV is 100 rupees. You receive 10,000 divided by 100, which is 100 units. After 1 year, the investments perform well. Now NAV becomes 120 rupees. So your investment value is 100 units into 120 rupees is 12,000 rupees. So your profit is 12,000 minus 10,000, which is 2,000 rupees. This 2,000 rupees is your mutual fund return. Now we will see important point beginners must understand. A higher NAV does not mean a fund is better. NAV only shows the price per unit, not performance. Now we will see the example. Fund A NAV is 50 rupees. Fund B NAV is 200 rupees. This does not mean Fund B is better. What matters is how much NAV grows. Now we will see another simple example. Fund A NAV increases from 50 rupees to 75 rupees. So the growth is 50% return. Fund B NAV increases from 200 rupees to 240 rupees. So growth is 20% return. Even though Fund B has a higher NAV, Fund A gives better returns. Why NAV changes every day? NAV changes daily because the value of the investments changes. These changes depends on stock market movement, interest rates and company performance. At the end of each day, a new NAV is calculated. Now we will see the simple comparison. NAV is the price of one mutual fund unit. Mutual fund return is profit from your investment. Here you can see the summary of whatever we have discussed.